back to our channel, or welcome if you are new here. This is the Akinle Way, the YouTube channel all about personal branding and finance. Yay!
Woo! Guess what we're talking about today? We're talking about what you guys have been asking for. Your credit score. Duh, duh, duh. I know. So, a lot of you said credit score, right? You guys wanted to know how to build your credit score. What is credit score? Everything I'm about to tell you guys, you can probably find on the internet, right? But this way, it's probably a lot more fun and a lot more interactive, right? So, I am saving you guys the trouble.
That's right.
And condensing all the information. And by the way, I'm going to tell you guys everything in layman terms, right? I'm not going to give anything I say some super complicated description. I'm just going to tell you how I think of it, right? And your credit score is basically a number that tells any lender
A number between
probably 1 and 999.
Yeah.
That tells any lender whether they should give you money or not.
Yeah.
In layman terms. Google will describe it differently.
Yeah, it just says if you're a trustworthy borrower.
That's it.
And you need it. Most people feel like, oh well,
Yeah.
I want to be the lender,
Yeah.
not the borrower.
Brother. Chill out, yeah? Chill out. I know some of you getting preached at church about that, but chill out, alright? It's exactly what she said. It's basically what determines whether you are a trustworthy borrower. Remember the last video we were talking about personal brand? Your credit score is also part of your brand, right? It's something that's really important, especially if you want to buy a house. And this is basically going to the next question I wrote here is, why is it important? If you want to buy a house, if you want to finance a car, if you want to get a loan for a particular project, anything.
Yeah, basically, even if you want to take out a mobile phone contract.
Yes.
Even small things like that, they'll check your
What
credit score.
are the other small things that people in their 20s?
When you go for certain jobs, your employer will look at your credit. Like, maybe you might not think so, but they do. Like, if you're going into like finance or
Government roles.
Yeah, or like,
I think that's maybe it.
Getting funding for a business that you want to start up.
Yeah. You want to get a credit card? You're going to need a good credit score.
Yeah.
And even if you want to get an increase on your credit card, they check your credit score.
Yeah.
So it's really important. What makes your credit score go down? Some of you are gonna some things are gonna say. Some of you are gonna feel like, oops, that's me.
No, the thing is, it was us too. Like, we got so many stories to tell you.
Yeah, I know. Okay, so the first one is paying your bills late. Now, this is one thing that is like a big fat no-no. All right, so I know some of you watching this video have done some dodgy stuff with your mobile phone bill. You've not paid it on time, and now you have a big black mark on your credit score, or you're in default or stuff like that. Please, oh my God, please tell your children and your children's children and your aunties and your uncles and your sisters and your best friends, do not pay your bills late. Do not. Like, even if you miss it by a day, it's an issue. It's really bad. So don't pay your mobile phone bills late. Don't pay your credit card payments late. Don't pay your loan repayments late. Don't pay your mortgage late. Don't pay your rent late. Don't do that.
Just don't be late. And the thing is, there's things you can do to make sure you don't be late, like scheduling direct debits from your debit account from your current account, to make sure that it's going to come out at a certain time, so you don't even really need to think about it, and it does it for you. Or you can set money aside to know that, okay, when your money comes in, you know that what Michael does, like, he knows all the money's going to come in at a certain time, so he gets all his bills to like be around the same day, so that it all goes out at one time. He knows the money's going to be there, so we're not going to be late. Another way you can do it is if you schedule on your phone. So like, some of my credit cards, I don't actually want to do a direct debit, because it's better with the credit if I put it there myself. I don't know if that makes sense, but yeah. So I have like schedule reminders on my phone to do so that I don't ever forget. So that might help as well, so that you're not late, because it's easy to be late.
Yeah, just don't pay late, because then it kind of goes back to what Cherie said. Like, if you're late with your credit card, if you're late with any bills, it just shows that you're an untrustworthy person. Damage to your personal brand, serious damage. Okay, next, taking out lots of credit cards and overdrafts. I know some of you are suspects or victims. I don't even know what. Some of you have 5 or 6 credit cards. Don't do that, right? And don't take out dodgy credit cards as well. Like, there's so many dodgy ones. It goes up to my next point is credit cards with high interest rates. Like, just avoid them.
Yeah,
Don't take.
always look. Don't be so like, oh, it's not your savior when you're in a financial situation to go and take out a credit card.
Yeah.
Do your best to consolidate all of your credit cards into one. Like, if
just have one credit card.
Yeah, just if you're gonna
just have one credit card. Like, I get loads of letters through the door, of like Barclaycard always sending me letters, and this is what happens to them. Bin. Literally, I just don't want it. So, like, you know, you get things like Aqua, like, there's so many credit cards out there.
I took out an Aqua card. I thought it was really good. I thought it was a good, they said it was a good credit builder card. I feel like they're quite good, to be fair.
It just depends if you can't pay it back. If you can't pay it back, just don't do it. Like, having 5, 3, there was one point I had like 3 or 4 different credit cards. My goodness me. Pray for me, guys.
It just makes it harder to juggle. It makes it harder. It's just a lot that you have to keep up with. It's a lot of money that's not actually yours.
Especially when you're not earning a lot.
Yeah.
It's a setup. Next is, this one was really interesting. Having lots of current accounts. Some of you crooked. I'm joking.
No, the thing is,
guys, I'm not judging you. I was
told.
She was a victim.
I was told that if I have many current accounts with different banks, it's better because any of those banks can like crash and fall. Like, you know, like what was that one that was it called?
I don't know.
Hard Rock or something Rock.
I don't know.
Bank. Anyways, banks can like, they're always like closing down and like filing for bankruptcy and all of these things, and if all of my money is in that one basket, I lose all my money. So you better have more than one bank account so that you can be safe. But
so, guys, basically banks are incentivized. Banks are selling all the time as well, by the way, guys. They're not just a place. They're not just a place where you put your money in. Like, banks are selling. They want you to have a current account with their bank. So they're not going to say, oh, how many current accounts do you have? Oh, you have 4. Oh, don't come to our bank. You know, it's all right. No, they will tell you, oh, you're all right. They'll just fill out the form for you real quick. They want you to have a current account. But I learned, especially when I was trying to sort my financial life, I learned that when you have a lot of different bank accounts, you look dodgy. Did you hear that? When you have loads of different bank accounts, you look dodgy. You look like you're basically trying to do money laundering. And what I had a financial advisor, and my financial advisor told me that when you have loads of different bank accounts, you look risky. You look really, really risky. You look risky to lenders because they check all this stuff. You get what I mean?
It goes back to when they check your credit score.
When they check your credit score and they check your credit file. You're high risk, basically. So just avoid having loads of current accounts. Moving on, asking for finance consecutively. So this may be, you know, you're applying for credit cards one after the other,
or
especially
like even if you're like a student and stuff, and you go to Apple Store and you want a Mac.
Yeah, and you don't have the money for it.
You apply for finance on the Mac.
And they decline you.
Oh, I need a new phone, so I go to Carphone Warehouse and I'm like, okay, and go apply for finance to get a new phone contract. Like, that's like, stagger it out a bit, especially if you get declined or if
just wait like 3 to 6 months before you apply for more finance again. Next is if you're not on the electoral roll. I don't know what your political views are, but just get on the bloody electoral roll, alright?
You do have to vote. You should, but if you don't want to, just at least be like on the electoral register, because it just helps. Yeah, it just helps a lot, just to bring your score from like 600 to 700.
Yeah, and by the way, just to create context, and the reason why I did this is because, like, guys, honestly, if I didn't have like a bad credit score, I wouldn't be able to make this video. Like, at the time my credit score was like, it was like 600 and something. It was a time when it was like 800 and something. Like, now I have a perfect credit score, like 999. That's why I can sit here and actually tell you this, because everything that I'm telling you now and I've just told you has helped to increase my credit score from like very poor to excellent.
And we actually have a whole PDF that we created all about how to get your credit score from wherever it is to 999 in 6 months or less, and it's like really helps. You can go through it and see step by step ways that you can implement straight away to help your credit score, so you can get back to those tips.
Next is spending close to your credit limit. So let's say you have a credit limit of £2,000, just as an example, and you keep spending and spending, and you're not putting it back, and you keep spending, and it's like on £100. You've gone from 2,000 to £100. That
left, yeah.
Credit score goes down.
Yeah.
So make sure that if you have like a credit limit of £2,000, like first of all, whenever you pay for something, Sharice told me 10 minutes ago that it's so dumb to buy pizza with your credit card, and I was like, I buy pizza with my credit card.
You're not supposed to buy little things with your credit card.
But my point is that when you buy something with your credit card, make sure you put the money back.
Yeah.
So my tip is, if you're going to buy something with your credit card, make sure you have the money in cash already. So even if you buy with your credit card, you can literally use the cash that you have to put inside. That also helps build your credit, by the way.
Yeah.
Like when you pay something with your credit card and you pay it back with cash into
or
your credit card.
you pay more than the
your credit score goes up.
Yeah.
So that is all the tips that we had for you now. I don't know if you guys can comment below if you had some more. Those of you watching this video and you're like working in the mortgage or finance industry or credit file industry, whatever. If you have more tips, like put in the comment below, it would be good, because people are going to read it, and you can, like, we're all here sharing, we're all here to share knowledge. We're not here pretending like we know everything and like, you know, no one knows what we know. We're not doing that. So there's some of you are going to watch this video and you already know some of this stuff, or there's things that, you know, that we have not mentioned, but you know, please put in the comment section. It would be good, so that when people watch the video and they read the comments, they can even become more educated. So if it's bad, how do you rebuild it? All right, if
your credit score is bad, you've been
feeling
so bad watching this video, like, oh no, I am so guilty of all of these things. Yeah, it's okay. We've got some.
Not all hope is lost, right?
Yeah.
So my credit score was very poor.
So was mine.
Yeah, it was very poor. So I'm about to tell you how I rebuilt mine. Okay, so the first thing I did is I went to Experian. Right, what is Experian? It's basically a website where it's a legitimate website, not illegitimate. It's a real website where you can actually check what your credit score actually is. So any lender usually use things like Experian or ClearScore or Equifax, right? Those are the main ones. That I did is, by the way, when you check your credit score in Experian, it just tells you a number, and it tells you whether it's good, excellent, or poor. It doesn't tell you the details that you need to know. So,
but there's other sites that do. That's why it usually cons you into like, oh, this site's gonna give me more information.
Yeah.
But it's not accurate at the times that it needs to be.
Yeah. So
don't fall into that trap either.
What I did is my credit score was going down, and I needed to know, why is my credit score always going down? I actually didn't understand it. So I then decided to do this thing on Experian where I paid a £14 a month subscription for a period of time. It wasn't forever, because I've cancelled it now. Okay. When my credit score was excellent, I cancelled it. I didn't need it anymore, but I was paying £14 a month to basically get really, really detailed insights into what was making my credit score go up and what was making my credit score go down, because essentially that was what was influencing my behavior, right? So if my credit score was going up and I knew I was going up, I was going to replicate that behavior again and again. If it was going down and I knew why it was going down, I was going to stop that behavior. So that's how my credit score grew over time.
Really quickly, to be fair.
Really quickly, yeah.
It didn't take too long.
It didn't. It actually took 6 months or less.
Yeah, that's why.
Pay your direct debits on time. This is like pretty much self-explanatory. I don't think we need to talk about why you should pay your direct debits on time.
Or just cut them if you really
cut
don't.
them.
If you're really struggling, it's okay to, like, you know, call up the people them and say, sorry, at this time I need to cancel my...
Great. So next one is minimize the amount of current accounts you have. I know that, like, loads of you sometimes have like Barclays, HSBC, Santander, NatWest. You have like the whole high street bank in your wallet.
You have a very good reason why you have all of those.
Yeah. Well, reality is that you look really, really risky to whoever's gonna be lending you money. So like, just cut that out and just have maybe one or two, but don't have more than that. By the way, those of you that have loads of different, you know, bank with loads of different banks, I'm not saying you have current accounts with all of them. You might have an ISA with one, have a current account with one, have one saving accounts with one, have a help to buy with one. Like, you need to also, like, when you guys are choosing which banks to bank with, find out, don't just apply for a current, I just want a current account. Find out what products that they have, right? Every bank has different products. Some of them have a current account. You can apply for a current, I use NatWest. I have a current account with NatWest. I have all my savings accounts with NatWest. Everything's with NatWest. I know NatWest ain't shutting down anytime soon. And if they do, they will let me know so that I can migrate. You get what I mean? Sorry, I call it traditional bank. If you want to use a traditional bank, use a traditional bank. But don't have too many of them because I now use digital banks now. So I have my traditional bank, which is NatWest. But I also, now I use Monzo, I use Revolut.
N26, but
I used to have N26, they're gone because of Brexit. But now I use all my digital banks. But my main traditional bank, and the one I have loads of different products with, is NatWest. I don't need to like be looking how much money I have in HSBC, Santander, Halifax, NatWest.
But the thing is, I used to feel like it would help me have money over there, because then if I don't see it, I'm saving and I'm good. Do you get what I mean? Like, so my money comes into my Barclays current account, that's like my salary. Then I would move it over to Santander for my tithe. I'm not seeing that, I can't touch it, there's no way. And then I also put my savings into another savings account in my Santander bank. And then I just felt like, yeah, I'm really good with my money. I'm really good with my finances.
You're really bad with your money.
Because, all of what's coming out of my Barclays, it's out of sight, it's out of mind. And I'm really developing my savings over there in Santander. And then I also had Lloyds as well, but I cut that out because
when I was dating Sharice, I made her cut all of these unnecessary cards out. Just didn't need it. And it helped your credit score go up.
Yeah, it did.
Sorry if the angles looks a bit mad, but it doesn't matter. It's what we say that matters. Anyway, we just wanted to wrap up, and we hope that was really, really helpful for all of you guys that were watching, right?
Right.
So now, Sharice has a special announcement for you. Special announcement for you.
Okay, so basically we have the Purposeful Personal Branding Nation. It's a Facebook group that we started over on Facebook, and it's literally a networking space for everybody.
Hey guys, sorry for the technical difficulties. The battery died twice. We ran out of storage, and I guess this is the human side of trying to make a YouTube video. So sorry. So if you want part of the video is like this, the part of the video is like that. Sorry, Anyway, we wanted to just say, guys, thank you for watching the video. Please subscribe to our channel, The Akinle Way. Follow our Instagram page so that you can get, kind of more off-screen content. I should put it. Content that's not YouTube, basically, is what I'm trying to say.
And if you're really interested in what I was talking about before, the Purposeful Personal Branding Nation, join us.
It's going to be fun, guys. We're all moving together. That's the fun part of this journey on YouTube, right? I am still going from here to here, and you guys are going to come with me. I'm going to bring you guys with me from here to here, right? Sharice is going to be from here to here. And in a year's time, as one of my favorite quotes, if you're improving 1% every day,
by the end of the year, you'll be 52%
every day,
better.
Not every week.
The thing is, his quote was every week.
So if you're improving 1% every week, which is technically how often you get our videos, let's just say, guys, just improve with us every single week, and by the end of the year, you'd improve the certain amount of percentage, which I will calculate and let you guys know. Maybe in the comment section. But yeah, guys, it's been really, really fun. God bless you. Take care. Sayonara. And yeah, we're not perfect, so this video might not come out perfect.
Okay, stop apologizing. Bye.